It's time now to catch up on the business news, and Charles Pellegrin joins us on set this morning. Hi to you, Charles. British pound, let's start off with that. They went through their biggest drop since May 1985.
Absolutely. Sterling took a plunge for about 2 minutes or so overnight here in Europe. It fell by about 6% to a level below 120 against the dollar. It's since then recovered. Such a sharp and sudden drop could be caused by a human error or an automated algorithm gone wrong. Either way, sterling's been extremely volatile since the Brexit vote. Investors trying to figure out on what terms the UK will leave the EU and whether or not Britain will have access to the single market. There have been indicators in recent days that we're headed to a so-called hard Brexit, like this statement by François Hollande, for instance.
Nous devons avoir cette fermeté.
We must be firm on this.
Nous mettrons en cause les principes mêmes de l'Union européenne.
If we are not, this could suggest to other members of the European Union that they could leave the EU, while continuing to reap all its benefits, yet without being saddled with its disadvantages.
A rocky road ahead either way. Meanwhile, the British Finance Minister, Philip Hammond, was on Wall Street yesterday, wasn't he?
Yeah, he was there to convince New York's big banks that the UK is still the #1 place to do business in Europe, regardless of the Brexit. Julia Kim looks at how banks are reacting to this.
Direction Wall Street for Britain's Chancellor Philip Hammond, on a mission to calm the jitters of the world's biggest banks. 4 of the United States banking giants, including Morgan Stanley and Goldman Sachs, employ over 25,000 people in the UK. The Chancellor was quick to reassure them that they would not be left worse off after Britain leaves the EU.
The problem is not highly skilled and highly paid bankers. The mood in the UK that drove the referendum decision is a mood about the pressure on wages at the lowest end, the entry-level jobs in the economy, from large-scale migration, largely from Eastern Europe.
But some financial institutions highly doubt that Britain will be able to retain its position as a top global economic hub, and are reportedly considering moving their European headquarters to Paris, Frankfurt or Dublin. The City of London is especially concerned that the government will take a hard line on immigration, meaning it could lose its access to the single market after the UK triggers Article 50 by its March 2017 deadline.
Even though we have a bit more certainty on the timeline, we're still really unsure about how the UK will do business with the rest of the EU, how it will get along with the EU, especially on the subject of financial passports, which the banks need.
The financial passport enables the UK's banks to sell their services across the EU's single market. Industry groups last month predicted that losing it would affect thousands of companies and wipe out 70,000 jobs.
Let's take a look at what's happening on the Asian markets this hour. And sterling's drop is weighing heavily on the Asian markets, with the Nikkei closing in the red, minus 0.23%. Traders are also waiting on the sidelines for the latest U.S. jobs report meant to be released later in the day. So you see the Hang Seng down 0.5%, and the Kospi in South Korea down over 0.5% as well. The Shanghai Composite is closed during a week-long national holiday. Let's turn to some of the other stories making headlines at the moment. The exploding phone scandal doesn't seem so far to have affected Samsung's results. South Korean giant expects its operating profits rose just over 5.5% in the third quarter, reaching $7 billion in September. A strong showing by the company's chip and display business is expected to offset the losses incurred by the phone business. An oil consortium led by ExxonMobil has been fined about $76 billion by a court in Chad. This in a dispute over alleged unpaid royalties. This signs a breakdown in the company's relations with the African country. The fine is larger than the total cost to BP of the Deepwater Horizon disaster, which reached about $62 billion. Exxon said it disagreed with the court's ruling and was evaluating next steps. Twitter shares plunged 20% after the technology website Recode reported that Disney, Google, and Apple were not interested in a takeover. The cloud computing company Salesforce is thought to be the only potential buyer. Twitter has asked for formal bids over the next 2 weeks, and the board reportedly hopes to close a sale by the end of the month.
Thanks for that, Charles. That's Charles Pellegrin bringing us business news. More, of course, from Charles and the business team in around an hour's time. He'll be joining Nancy Dimich for all the latest.